What's up everyone, it's Kadi with MoneyVest. In this video we are going to be talking about Tesla stock, and I've got some very interesting analysis that I want to share with this company because there were some speculations that Tesla is looking at laying off some of its workforce as Elon Musk conducts interviews and evaluations with managers to figure out what employees are truly essential to the core business activities and are they really contributing to Tesla's revenue and bottom line profits as well. So we're going to take a look at some of the efficiency metrics, and some of them are actually quite underrated, which I want to go over in this video, and also talk a little bit about the technical analysis and what I'm planning to do with my current position on Tesla. As always, if you enjoy this video and find it helpful, make sure that you drop a like. Don't forget to subscribe to the channel. Again, links to our Discord and Patreon is going to be down below if you're interested in joining and getting access to all the members only private videos, and also accessing all the Discord channels, trade alerts, trade ideas. I am planning on selling some calls on Tesla here very soon to hedge more potential downside if and when we actually do get a breakdown below $180, and I will be generating some cash flows and premiums along the way, and all the alerts will be sent out in the Discord, so you can access all of that over there. And I did share a brand new members only private videos with my entire shopping list, 12 stocks that I'm planning to buy with the exact buy targets where I'm planning to buy them, and including ETFs that I'm dollar cost averaging into, and a lot of other tactical potential ideas that you can definitely access. And do connect with me on Instagram as well. My handle is going to be CastWRP, and again, you can access join our Patreon, access all the 45 plus members only videos, all the Excel spreadsheets, and Discord access as well. So Elon Musk's Tesla may have bad news for its employees. So Elon Musk-led electric vehicle company Tesla is reportedly planning to reduce its workforce with a fresh round of layoffs, according to a report by Bloomberg. And the report cited some of the people familiar with the matter who have claimed that the company sent out a single line query for each job after canceling some employees' biannual performance reviews. However, the electric car automaker hasn't officially announced a new round of layoffs as of yet. Now, the question really is with the Tesla, has it really bottomed, right? Has Tesla stock finally bottomed out where it's trading at the moment, trading around $180, $185 per share? I mean, 2024 has really not been the best start for Tesla because it's already down over 24% year to date, when the S&P 500 is up over 2 to 3% on a year-to-date basis, actually up over 5.3%, and the NASDAQ, I believe, is up even more. So if you come down, the NASDAQ is up over 6%, and a lot of its peers, when you take a look at NVIDIA, which is kind of on the similar boat when it comes to growth and volatility and price action, I mean, NVIDIA has just been crushing it in 2024. It's up a little bit over 41% already, 41% year to date, and it's not even been 2 months. Advanced Micro Devices, pushing higher very nicely. It's up on the year also a little bit over 17%. And even if you take a look at companies like Meta, right? I mean, Meta Platforms was one of the stocks that was not really loved. It was one of the most hated stocks back in 2022, and it has sparked this huge recovery back up. And year to date, the stock's already up over 33%, and Tesla continues to struggle on a year-to-date basis, down over 24%. So the real question is, has it finally kind of bottomed out here, or does it have more potential downside in the 150s? I will answer that question using this table, and I'll also talk a little bit more about, of course, the macro dynamics that are at play, because Tesla really depends on interest rates. There is some dependency on where interest rates are with respect to where demand will be. Now, in order for us to really truly understand, has Tesla stock really bottomed, we have to first figure out what was the reasoning behind this sell-off in the first place. And in my opinion, the biggest reason why Tesla's been so volatile, and more specifically why it's been selling off quite considerably, and it's down 24% year to date, has to do a lot with, of course, margin compression, because that's exactly what Wall Street does not want to see, is that margins coming down, and that thereby affecting earnings. We obviously know that Tesla has gone through multiple phases of Elon Musk selling, lots of volatility because of his views and all the threads on Twitter. But at its core, investors feel a little bit uncertain because of price cuts and margin compression, which we obviously learned from their earnings report. You can see that we have seen 4 or 5 consecutive quarters of margin compression, from gross margins coming down from 23.8% down to 17.6%, and even on a year-over-year basis, 612 basis point decline, and operating margins have come down from 16% down to 8.2%, so that's practically getting cut in half and down almost 800 basis points or 8 percentage points on a year-over-year basis. And net income here also down 39-40% as a result, from 4.1 billion to just under 2.5 billion dollars as of the fourth quarter 2023 as well. So these right here are obviously some of the main reasons why Tesla stock's been selling off. But let's take a look at some of the efficiency for Tesla. Now, what this chart basically does is that takes into account employees, right? The number of employees that Tesla has in its company. Then it takes a look at revenue, gross profit, and net income, right? So some of the most important metrics: top line revenue, gross profit after taking out cost of revenue, and after everything is said and done, what's the bottom line profit? And what I've done here is that I want you guys to focus on these three lines, which is revenue per employee, gross profit per employee, and net income per employee, because this basically shows us what? It tells us how quickly is Tesla scaling its employee count or head count per se, and is that being reflected in the revenue and the profits and earnings? Because if Tesla is over hiring, if it's hiring too fast and productivity and efficiency is not being reciprocated in the same way, that means Tesla is becoming less efficient. That means Tesla is becoming less productive and margins will compress, right? So what you'll notice here is that despite the margin compression that we saw in Tesla, more specifically, what you'll notice that 2023 was kind of a pivotal year for gross profit per employee because of course, those price cuts, and net income actually did increase. So what you'll notice is that employees have increased by 34% in the last 9 years. So since 2014 to 2023, employee count has gone up 34% every single year to now 140,000 employees working at Tesla. Revenues have gone from 3.2 billion to over $96 billion. That's a 48% growth. So that differential right there is more efficiency, right? Meaning that Tesla is generating more revenue per employee, because earlier it was generating, let's say, 0.3 per employee in terms of revenue. And this is, again, 0.3 of $3.2 billion. And then look at that increase, and it's now at 0.69, right? It's kind of fitting that it comes out at 0.69, but that's really truly the number here. And it's increased by 9% on a year-over-year basis, on a compounded annual basis. That means Tesla is generating more revenue per employee. Said another way, if we multiply this number to, let's say, 1,000, we're looking at 3.2 billion. That was the overall revenue, and per employee it was 0.3, and now it's sitting at 0.69, meaning that it's more than doubled. Revenue per employee is more than doubled, so revenue has grown at a faster rate than number of employees. So that simply means that companies become more efficient over time. Gross profit per employee, same exact thing, not at the same rate, but it has gone up from 0.09 to 0.13, and it's up 4% on a compounded annual basis. And I really want you guys to focus on what's happened between 2020 and 2023. So up until 2014, we didn't really see a lot of expansion there, not a lot of efficiency. So 2014, 0.09. Take a look at 2020. We're still at 0.09. So this is the number that I want you guys to focus on, 0.09 and 0.09. These are two exactly the same numbers. So in 6-7 years, Tesla didn't really grow gross profit per employee. It hired more employees at the same rate as it grew its gross profits. But look what happened post 2020. It became more efficient. Now this number jumped from 0.09 to 0.14 gross profit per employee, meaning gross profit jumped more than the employee count, head count, and then it accelerated to 0.16, but then in 2023, it came back down to 0.13 as well. And these are some of the metrics that really tell us how efficient Tesla is becoming. And the reason for that, obviously, is the decline that we saw in gross profit on a year-over-year basis, even though employee count continued to grow. And as a result, this right here was a reasonable decline here. And net income per employee, which is surprisingly still positive and good, it trended from 0.01. Of course, it went from negative to positive because Tesla struggled with profitability for the longest time, 0.06, 0.10, and then 0.11 in 2023. Because net income continued to expand and grow for Tesla. So that, again, is a positive step in the positive direction moving forward. So I do believe that going into 2024, if Tesla is able to maintain its employee count, head count in the 145,000 range, they don't hire too much. And if there are any speculations of, let's say, laying people off, that's obviously going to affect the bottom line. It's going to improve the bottom line. And if they're able to, of course, surpass over $100 billion of revenue, if they're able to surpass over $25 billion of gross profit, and again, over $18 to $20 billion of profit, then these numbers are once again going to start accelerating back up, meaning that the company is once again becoming more efficient, more productive, because they're generating more revenue, more profit, and more cash flows per employee. That's one of the single most important metrics to look at when you're looking at efficiency of any company. How much revenue and profit does the company generate on a per employee basis, and how that has trended higher or lower over the years. And for Tesla, it has trended in the right direction. But recently in 2023, it has come down. Specifically, the gross profit numbers have come down. Net income has more or less stagnated a little bit, but it was still up 10% on a year-over-year basis, because if you do this divided by this, we're looking at 9%. Basically, 9% increase was that number for Tesla. So that's going to be that analysis here. So going over to the price action, really, and again, if you come back, so we did see a little bit of an acceleration in the operating margin quarter over quarter. So it went from 7.6 back up to 8.2. And then we did have GAAP gross margins still coming down a little bit from 17.9 to 17.6 for the company. EBITDA margins also coming down from 16.1 to 15.7 as well. So it's really going to come down and boil down to a couple factors here. Is Tesla going to continue price cuts in 2024? And if so, are they going to be able to maintain the margins and some of the more efficiency metrics like revenue, profit per employee for the company moving forward? Because at the end of the day, Wall Street really cares about the bottom line, which is the EPS, earnings per share. And if that continues to slow down or comes down, then of course Tesla stock is going to struggle. So if you take a look at it on an annual basis, 2024, it is expected that Tesla is going to see a slight moderation in EPS. It's going to come down from 312 to 308 because the guidance was not that super strong. And from 2022, when Tesla had a phenomenal year of $4.07, it came down to $3.08. So couple years of trending lower and then accelerating back up in 2025 is what Tesla is expected to do among analysts. So for me, 180 is going to be a very strong support. So I wouldn't mind, kind of watching that support and maybe selling some calls up to $235 to $240, because that really is where the next resistance is going to be. So this is the overall downtrending channel within which Tesla is trading. So this is the lower highs and the lower lows. And if we do get back up to this resistance, that's going to be $240, $235 per share, and a much stronger support here in the $180 level, all the way down to 150s for Tesla as well. So those right there are going to be some levels to keep in mind for Tesla moving forward. And I wouldn't mind picking up, of course, a lot more shares in the 150s, because that's exactly where my fair value will be for Tesla moving forward. So hope you all enjoyed this video and found it helpful and the entire analysis on Tesla. So long answer short, the analysis is that, of course, nobody really knows whether Tesla is bottomed or not, but a lot of it is going to be hinging on the idea whether Tesla sees a lot more price cuts, a margin compression. In my opinion, most of it is already done. As Dan Ives has mentioned, that over 90% of the price cuts may have already been completed. So maybe there's a few more that are going to be happening in 2024, but the demand needs to come back in for Tesla, regardless of where the prices are for its electric vehicles. And I think a lot of that is going to depend on where the earnings are, where the interest rates are going to be moving forward in this year. So again, hope you guys enjoyed this video, found it helpful. Make sure that you drop a like. Don't forget to subscribe to the channel. Again, links to our Discord and Patreon is going to be down below. You can access all the members-only private videos. Again, my full shopping list with 12 stocks that I'm buying with my buy targets. You can join the Patreon, access all the Discord channels and the trade alerts, and also do Instagram as well. My handle is going to be CASWRP. As always, happy investing. I'll see you all in the next video.